In this video, I'm going to tell you about a major shakeup of benefit rules that's been quietly announced by the government. It's been slipped in almost unnoticed amongst other changes to benefit rules, and it's really quite a big deal. It's not due to come into force until April 2026. But when it does, it will mean the Department for Work and Pensions will have unprecedented powers to monitor your bank account if you're claiming certain benefits. So let me explain what's happening, who it affects, and why it matters. If you're new here, I help you understand law, so make sure you subscribe so you don't miss out on future updates. Now, I should point out at the outset that while these changes are undoubtedly significant, the Department for Work and Pensions has tried to play down their significance. They describe them as a routine step to modernize our benefit system and stamp out fraud. But critics like the Child Poverty Action Group argue they represent a worrying shift towards a surveillance state, and that the changes could harm some of the most vulnerable people in society. So, what exactly are we talking about? Well, the Department for Work and Pensions is getting new powers that will enable banks and other financial institutions to share data about their customers with the government. Specifically, the DWP will get access to bank transaction data where there's a suspicion that someone might not be eligible to receive benefits. At the moment, the DWP can only ask for access to bank transactions if they have reasonable grounds to suspect fraud. This is known as a live bank account investigation, and it's usually triggered when there are obvious signs of fraud or when someone has failed to declare all their income and savings when applying for benefits. In these situations, the DWP writes to the claimant asking them to confirm their circumstances. If the claimant doesn't respond, or the information they provide isn't enough to satisfy the DWP, they can then apply to the court for a benefits cap order. This gives them power to access that person's bank statements for the past 6 years. Courts generally grant these applications, but there are safeguards in place to protect the claimant's interests. However, the new powers go much further than this. Rather than waiting for fraud to happen, the DWP wants to find ways to prevent it. That's why they've announced plans to work with banks to set up systems that automatically flag accounts that look suspicious. To do this, they will give banks a list of eligibility indicators, which are essentially rules that the bank must check for. When they see something that matches those indicators, they will know to send details of that account to the DWP. For example, if someone is claiming universal credit and their balance goes over $16,000, that would normally make them ineligible for the benefit. So the bank would flag that account to the DWP. Or if someone is claiming incapacity benefit, but is regularly spending large amounts on nights out, their account might be flagged too. The DWP insists that this kind of data will only be used to check eligibility for benefits and won't be used to investigate individual transactions. They say they won't pry into people's day-to-day spending habits. Instead, the idea is that banks will do the legwork of analyzing customer accounts and highlighting anything that looks unusual to the DWP. Then the DWP can decide whether or not to investigate. So who could be affected? Well, these plans primarily target claimants of means-tested benefits, which base eligibility on income and savings. That includes universal credit, housing benefit, income support, income-based job seekers allowance, income-related employment and support allowance, council tax support or council tax reduction. For these benefits, exceeding financial limits could lead to an account being flagged. For example, someone with savings above $16,000 is typically ineligible for universal credit. There are other benefits, however, where account balances wouldn't normally trigger a flag. These include state pension, disability living allowance, carer's allowance, child benefit, child tax credit, working tax credit, maternity allowance, adoption allowance, shared parental leave pay, guardianship allowance. Now, it's worth pointing out that most of these benefits are either not means-tested or they're only very indirectly means-tested because the level of benefit you get is not based on your income. So it's less likely that a bank would ever flag an account where one of these benefits is being paid in. However, there are exceptions. For example, the level of child tax credit you can receive is reduced if you earn above a certain amount. So if you were a high earner, Your account might be flagged simply because your child tax credit has been reduced, even though that wouldn't normally affect your entitlement to other benefits like universal credit. That's why it's important to remember that this is not just about catching people who are fraudulently claiming benefits. It's also about catching people who are genuinely entitled to benefits, but whose circumstances have changed and who may no longer be entitled to them. And there are lots of reasons why that might happen. People often fail to report changes in their circumstances, especially if they're not really sure whether it's something they're supposed to do. Other times, a change in circumstances might be entirely outside of someone's control. For example, a relationship breakdown or the death of a partner. Whatever the reason, the result is the same. The DWP recovers money from the person that they overpaid, and if that person is already struggling financially, that could push them into real hardship. The DWP insists, though, that nothing will change without a good reason, and says that their new powers will be applied fairly and proportionately. They say they won't start an investigation just because an account has been flagged. Instead, they will assess the information they receive and decide whether or not there is a genuine risk that someone might be getting too much money. Only then will they take further action. Even when the new rules come into force in 2026, the DWP says that minimal data will be shared, and they intend to start small, only using it to target the most common type of overpayment before expanding in the early 2030s. They insist that they'll take a test-and-learn approach and publish annual reports setting out how the scheme is working in practice. Nonetheless, charities have criticized the changes, arguing that they could push more people into financial difficulties. The Child Poverty Action Group argues that the scheme could easily identify families who are living in poverty and therefore have difficulty paying bills on time or making regular payments. But not all missed or late payments are the result of deliberate benefit fraud, which could mean that innocent families are wrongly investigated, adding to their stress and pushing them deeper into debt. The government disagrees, though, saying that people will only be investigated if there is clear evidence that they're no longer entitled to their benefits. They argue that most people understand that if their circumstances change, they need to tell the DWP, and that only a minority deliberately try to hide changes in order to carry on receiving benefits that they're no longer entitled to. So what happens next? Well, the government has confirmed that the rollout of the scheme will begin in 2026, and that they will gradually expand it until every relevant benefit is covered. They haven't said exactly which benefits will be included in the first phase of the rollout, but they have said that it will focus on the most common types of overpayment. They have also said that they will consult on draft regulations in the summer of 2023, and that these will be reviewed annually to make sure they are working as intended. So if you think these rules could affect you, I recommend keeping an eye out for updates from the government and making your voice heard during the consultation. Now, I'd love to know what you think of these changes. Do you think they go too far and represent an invasion of privacy, or are they a necessary evil in order to catch benefit fraudsters? Let me know your thoughts below. Also, if you enjoyed this video, please give it a thumbs up and subscribe so you don't miss out on future updates. Thanks for watching.